Welcome everyone to the last session. I guess after the cliche joke about being us keeping you from cocktail hour, so keep it quick. I've already had three. It's going great now. Anyways, welcome Sean. He's a longtime crypto guy, and if you don't know him, he's the head of Coinbase Ventures. And I think this should be a good talk because a lot of us know what venture capital is, and we know there's a thing called Coinbase Ventures. But what does it actually mean? And I recently learned from Sean, you guys have now made 500 investments.
That's right. We just crossed 500.
Okay. But like on a practical level, what's that mean? I know there's a big VC firms, but what's the difference between like a corporate VC, like, Google Ventures or Coinbase Ventures? Like what is different from like that and say Sequoia or Andreessen?
Yeah, I think the way that we think about Coinbase Ventures differentiation is we articulate it as sort of like the API into Coinbase. So if a traditional venture fund is forming theses on different spaces, but their ability to help is really just focused on providing advice and guidance, we can bring something different because we can connect founders or portfolio companies with the heads of our different products. We can help facilitate partnerships. And then we have a lot of lived experience from operating in the crypto space for over 10 years that founders find really valuable when they're thinking about how to navigate the regulatory landscape, how to think about some of the latest trends in cybersecurity and whatnot.
Okay. And so that sounds like a network, and that's what conventional VC firms do too, but you've probably got a very kind of unique network. Is that right?
I would say we have a unique network, but it's not just the network where we can facilitate an introduction, but we can actually like put a partnership together because I can go to Jesse Pollock as our head of base and say, here's a startup that you need to have building on base and articulate exactly why, and just push those things together much more closely because we're on the inside, if you will.
Right. And then also too, like what's the economic model? Like conventional VC, you guys probably know, they bet on a startup. The plan is about 7 years. You hope there's an exit and then you get paid out. You paid your LPs. But like, do you have LPs or like if you do get an exit, where does the money go?
Coinbase Ventures is fully funded by Coinbase. It always has been, and for the foreseeable future, at the very least, will be. So we invest Coinbase's balance sheet capital directly into the ecosystem. We started investing in 2018. For the most part, we're long-term holders, but we do look to selectively exit positions that we've held for 5+ years and then recycle that capital by investing in new startups. So we've started to do that within the past year.
And have you had any, what you'd say, exits yet?
Yeah, we've had a handful of exits. We haven't really disclosed them publicly as of yet, but I'm confident that they'll start to show up in our publicly traded financials soon.
Okay. That's interesting. So, and also with crypto, it's kind of a different beast. I mean, with just given that like there's tokens and, I think it's a lot more liquid market than conventional things. So, what's distinct about crypto VC investing versus like conventional VC investing?
Yeah, I think liquidity management around tokens is definitely huge. There's a lot of advantages. There's a lot of complexities that's associated with it. I think the way in which you manage the portfolio is quite different. So something that we do very actively is we'll actively participate in networks where we have made an investment. So that could be staking, that could be providing liquidity on chain, just doing whatever we can to actually support a project beyond just providing capital. I think that's a relatively unique relative to traditional venture, where it's more participating as a board member and as an advisor or a consultant.
Right. And I mean, we might have some entrepreneurs in this room. What advice would you have for them for approaching a VC fund? Like what's something they should do and something they should not do?
Uh, have a one-liner on your pitch. Lead with the problem that you're trying to solve rather than technology. I think that's something that the crypto space in general, we talk a lot about great technology, ZK technology, layer twos, et cetera. But sometimes we lose sight of what is the simple problem that we're trying to solve. And so I always guide folks to focus on that.
Okay. And what should they not do? What's the biggest mistake founders make when they're trying to get VC money?
It's a good question. Biggest mistake that I see, I see some folks that are willing to cut like unique deals. And, frankly, like when somebody comes to us and they say, hey, we'll allow you to invest in a private token round at a significant discount, it raises eyebrows, frankly, from us, just because I think it calls into question integrity. And that's super important for us when we're thinking about companies to invest in.
So don't be shady.
Don't be shady.
That makes a lot of sense. And let's talk about like what's what technologies have you excited right now? What are you looking to invest in?
Yeah, I think within the EVM ecosystem, we're really excited about just sort of the modularity of the broader EVM ecosystem. So I think the analogy that we think about is Solana is sort of like iOS, and EVM is evolving much more like Android. We obviously have Base as our layer two blockchain, and we're investing quite a bit in layer threes that allow developers to customize how they think about things like data availability. Restaking falls into that category as well. And then the second is it's sort of a buzz term right now, but we are seeing real demand from AI agent marketplaces that are looking for solutions to real payment problems. And we're excited about that because we think that crypto tools provide a really seamless solution to address those problems.
Yeah, I mean, what do you say to the cynics, or not cynics, but skeptics, including me, when I hear like AI and blockchain, I'm like, run away because it's going to be like all of the buzzwords and probably vaporware. But like, tell me, is there like some real innovation going on there?
Yeah, I think the very simple use case that we see is if you believe that there's going to be more and more AI agents over time, a lot of these AI agents have to pay for services that they're performing and that they're automating. And AI agents can't really get a bank account. So, how do AI agents pay either humans or other agents for transactional services? They can have a crypto wallet, and that can be programmed to make payments directly with USDC or another stablecoin. And it can happen globally and in a programmatic way.
Yeah, no, actually, I shouldn't be that skeptical because I did hear Brian Armstrong talking about that, your CEO, of the idea of a AI powered crypto wallet that could transact with other entities. How far away is that on the ground, or like what kind of technological steps or network effects do we have to achieve before that's a thing? Like, what's the timeline?
I think it's here now. We're seeing a ton of demand for it right now. It's still very experimental. It's emerging, but we're finding a lot of these companies coming to us. And the question is not, hey, can we use crypto wallets or anything like that? It's just an articulation of we need an ability to provision wallets programmatically and enable our AI agents to make payments. So we're actually very excited about this in the very near term.
Interesting. And and then there's of course Coinbase, which I think I've covered crypto for more than 10 years, and crypto industry likes nothing better than fighting with each other. And I think but sometimes it comes up. Actually, I heard it on my last panel. Coinbase is a central bank. You guys are centralized. You sell out crypto and stuff like that. Is that ever a challenge for you in dealing with founders?
In terms of
Just that narrative and that, which, yeah, I mean, my opinion is not really fair because I think your leadership has remained committed to decentralization, but at the same time, you're a big centralized entity. And my argument is like the crypto world needs that. You got to get people to crawl before they can walk and go, decentralized. And you guys have brought so many people in, but you also face skeptics who are like, you guys are, the evil empire. So what do you say to them?
Yeah, it's a good question. I mean, we're in the business of trust. I think that is when I think about the core differentiator for Coinbase, it's that we're the most trusted platform to buy and sell and access various crypto markets. And we've taken steps, I think, to reassure folks along that. One of the biggest ones is we're basically an open kimono as a publicly traded company. I get people who ask us questions all the time about how we think about a certain market or how a certain product is performing, and it's all out there in the open. So I think you're right. We start from a place of centralization that allows us to provide the bridge. And now we've committed with Base to a path towards progressive decentralization. We're making great progress towards stage one decentralization as soon as the end of this year. And that will progressively take Coinbase further in that path as we move more of the company on chain too.
Yeah, I know this isn't really the topic of the panel, but I'd love to hear a little more about Base too, because we're talking backstage, and I've said earlier today, I think crypto needs some new narratives. I mean, each cycle has got something exciting and new, and the big story this time has been like Wall Street coming in, which is cool, lots of new funds, and Washington. Crypto's learned to lobby Washington D.C., but that's not really what I think a lot of people got into crypto for in the first place. Whereas it seems with Base and Jesse Pollak, the leader of it, that there is sort of something new there. So, just tell me a little bit about the Base ecosystem, who's signing up, and how's it going to translate into exciting stuff on the ground?
Yeah, we're super excited about the Base ecosystem. It is fun, quirky, energetic, frenetic. But I think relative crypto in general, I think is mostly connotated with finance. And the things that we're seeing on Base that I'm most personally excited about are just consumer applications. A lot of them look like social applications. There's fun community-based projects. So we're very excited about those categories, and we're looking for the ones that are going to catch on. But that's where I think we see a lot more interest in new traction. That it feels like a new narrative. To your point.
Yeah, and which apps are getting the most traction on Base, or what's like the most promising?
Yeah, we're excited about the general create to earn dynamic. So when I talk about like problems to be solved by crypto, I think one of the key problems is in a traditional model with social media platforms, most of that value doesn't actually accrue back to the creator. It's kept by the platform that monetizes data. And so we have new applications like MoshiCam, Zora, Dracula. These look like Instagram or TikTok like applications, but built on crypto rails. And it's actually like a really magical moment when you introduce somebody who has no crypto knowledge to one of these applications because they post a picture, it goes a little bit viral, and then the next day they wake up and they're like, I have $50 in my wallet. I didn't actually fund my wallet. I didn't have to purchase ETH. I didn't need to set up a wallet. You didn't need to do any of that kind of stuff. And so it's sort of just abstracting everything away to the background. But those are just some examples of things that we're really excited about.
Yeah, I mean, devil's advocate, like I love that idea of, basically getting creators to not have to, rely on Facebook or intermediaries, just get paid directly. But, I know Jack Dorsey did some good stuff on Twitter with that, trying to encourage it, but it's just hard because it's friction, and the UX isn't there yet, I'd argue, or, maybe it is, but like, I just think normal people who are used to using platforms like Venmo, do they want to deal with something like this? And how far are we away from making this like mainstream?
Yeah, I mean, there's real network effects that exist around social media platforms, and I think what you have seen is that when there is traction, it really goes vertical. So, earlier this year, and at least within the crypto space, Farcaster had tremendous growth. That's tapered off now to some degree, but I think that we'll see it in spurts over time as it gets exposed to new communities.
Yeah, that's interesting. And I know, the VCs don't love this question, but tell me something that hasn't worked too. Like let's, each cycle brings something. Like what is just something that crypto believed in a lot once and just ain't working out?
From a venture perspective, or just generally?
Both.
I mean, we still don't have any mainstream consumer applications, right? And I think we're still looking for that. I think we all have high hopes. The category that I would say I probably have been personally maybe the most jaded from in some ways is there's a ton of investment that went into crypto-based gaming apps and gaming companies. A lot of money that's been spent building those games. I still don't think that we have seen a really high quality or blue chip game experience come to market yet. I think that will happen. It's a question of when, not if, but it's been relatively underwhelming so far.
Yeah, anyone remember Axie Infinity? Um,
Yeah.
so, yeah, I remember being at some talk like in Denver 4 or 5 years ago. The Axie Infinity guy having saying like in all seriousness, like legacy governments, because people are calling the government of the Philippines were having a little bit of an issue with that. He's like, yeah, legacy governments won't really be around much longer. Just like in all seriousness, and it was interesting. We were talking to behind backstage a little bit about sort of too many chains too, and I'm still getting pitches of like a new layer two, a new layer one, and you know maybe I'm wrong, but I just think we have way too many chains. And when I say new chain, it's like people here are trying to just like force feed tokens and exit. And the last thing the space needs is any more blockchains. What do you think of that?
I agree. Yeah, I think we're going to go through a little bit of an arc here over the next 6 months. We expect there to be a proliferation of other L2s. The way the technology is developed, it's very easy now to launch your own L2. It's very difficult to scale an L2, to build a community around it, to have liquidity around it, to get integrations with various on ramps. So it's very easy to integrate and access that L2. So I think a lot of people will try, and many of those will end up deprecating those L2s over time. But we're sort of in that moment. You and I were talking about stablecoins. I think it's a similar dynamic in stablecoins now, where what we're seeing is the complexity to launch or issue a stablecoin is coming down significantly because you have companies like Paxos, Bridge, Braille, and others that are making it very easy to issue a branded stablecoin. But it's really difficult to get a network effect and to really get that flywheel going on chain.
Yeah, no, stablecoins are really interesting right now, but the macroeconomics of it seem challenging to get into. There's more and more market entrants. Like PayPal is struggling to get some traction. They're PayPal, and everyone and their dog's also launching a stable coin, even as interest rates come down. So I can't figure out yet those stable coins or network effects thing where it's a winner take all. It's going to be the duopoly of Tether and USDC, or if there's going to be other entrants kind of making headway in the space.
Yeah, I think when we talk about stablecoins historically, we're talking about stablecoin issuers. And to your point, you're right. In a declining interest rate environment poses challenges, I think, to that core business model. My expectation is that over time, you'll see the business model evolve quite a bit to be less reliant on interest income and more reliant on building out products and services around the stablecoin. And so when we think about that, we're seeing a ton of demand right now for corporates and other large entities to actually make payments using stablecoins just because it solves real problems that they face with money movement. And we believe that there's going to be ways to monetize on those elements as well.
Yeah, I mean, payments is a trillion-dollar market. Even a scrap of that's going to be valuable. But what do you mean specifically, like in terms of because for stable coins you can have P2P, you can pay your friend. Remittances are often invoked. But are you saying it's more kind of trade finance and corporate across borders, or what's the use case there?
Yeah, for corporates, I think what we see a lot of is treasury management and repatriation of funds. So a company that operates in Argentina might accept local currency there. They don't necessarily want to hold that local currency very quickly, so they want to repatriate to the US. And if they run through traditional payment rails, that could take 5 to 7 days, where they're taking FX risk throughout the life cycle of the money movement. With USDC or with another stablecoin facilitating that transfer, that could happen nearly instantly. So we're seeing a lot of demand around that idea right now.
Okay, and just taking back to Coinbase for a sec. I mean, the point again of venture investing is it's a hit-based thing. You invest in 10 companies, and you accept 9 are going to fail, but the one you hit is going to be big. And I'm wondering, well, at what point are we going to see this show up in Coinbase's balance sheet? I think we spoke in the past. You said a company like Salesforce, sometimes they've got a big venture unit, and sometimes they have an exit, and then in quarterly earnings it shows up on the balance sheet. Will we see a venture profit show up on Coinbase's balance sheet in the next year or two?
I think we will in the next year. Like you mentioned earlier, venture is the long-term game. We started this in 2018. Typically takes 5+ years for those companies to mature and to see material exits. We're getting to that point now where, especially as we start to diversify some of the positions that we have and recycle that capital, we'll start to see it show up in our income statement and then become a larger portion of our balance sheet.
Okay, yeah, no, that'll be interesting for diverse revenue streams. Just to we're almost wrapped up here, but tell me, who are some of your favorite people in crypto? Who is inspiring you right now?
Who's inspiring me right
Yeah.
now? Um, I mean, I get to work with Jesse every day, so he is obviously always inspiring me. I spent quite a bit of time with Fred Ursum, who I think has very prescient views on the space generally. Outside of the kind of Coinbase circle, I've been spending a lot of time with founders in India actually, and in the Indian crypto ecosystem. I see some folks here in the crowd, and some of the founders of some of the exchanges there, like CoinDCX, I find to be really inspiring, just because they have a very different lens and a very different view on the world.
Yeah, and just sort of take us around the world for a bit. I'm based in the U.S., and I mean, frankly, I'm just sort of sick on reporting on DC stories. I like politics, but at this point, it just feels like crypto's become like another industry besides big pharma or big food, lobbying for what it wants in DC, and that's the big leagues. Welcome, but it's just not a very interesting story, and presumably Gensler's going to go at some point, and the dam will break, but it might be a while. So, where in the world do you think it is the most vibrant, and you're seeing the most interesting crypto action?
Yeah, honestly, the most interesting applications and activity that we're seeing are sort of in emerging markets like Argentina, greater parts of Africa, Southeast Asia. And a lot of it is focused on stablecoins because it just solves real problems for people in those markets. In terms of from an investing perspective, we're continuing to see a lot of innovation in the UAE and in and around Dubai. A lot of Indian founders have moved there. A lot of folks from Europe have moved there. So we're excited about that. And then there's a resurgence in core Europe because Europe has a new comprehensive crypto regulation going into place called MiCA. The first stage just went into place at the end of June, and it'll progressively become binding over the course of the next few months. So with regulatory clarity, I think we're starting to see founders gravitate towards those markets and feel reassured that they can actually start a company without getting hit with the Wells notice or something like that.
Gotcha. Okay, and last question. It's an easy one. What price is Bitcoin going to be at the end of this year?
At the end of this year,
Yeah.
90,000.
All right, gold. Okay, well, thank you, everyone. That's a wrap for our panel. Give a big hand to Sean, please, and we'll see you for drinks.